watching WGAL News 8.
The latest rounds of tariffs and other policies made by President Donald Trump have caused some uncertainty and fear for the stock market. So here to talk about it is Alex Langan, the Chief Investment Officer at Langan Financial Group. Thank you so much for joining us. Really appreciate it, Alex.
Absolutely. Thank you.
Yeah, so it's been shaky on Wall Street. We're seeing a mixed bag today, but we've seen some of the worst weekly losses since September. What have your thoughts been on the state of the stock market?
It's definitely been tough watching us from the sidelines. People are really nervous and apprehensive. So I would say most people stick to your game plan. If you're looking for retirement, maybe have a little bit of money on the sidelines.
Yeah, and with the Consumer Price Index report that's out, what changes can we see there? I understand that the CPI report could signal that people are spending less. So how can that affect the market, both in the short term and in the long term?
You're absolutely right. So consumers are slowing down on their spending. Businesses don't know what to do with the tariffs. So money is not flowing through the economy as much as people would like, and that is signaling slowing in overall economic output.
Are you worried at all with what you're seeing so far?
No, a little apprehensive. We just need certainty. That's exactly what we need. We need a game plan for what the tariffs are going to be, how long they're going to be in place, and how we can navigate around it. Businesses cannot plan right now, and that's what's really frustrating the economy.
Yeah, speaking of which, where do things now stand with the largest American companies? We've got NVIDIA, Apple, Microsoft, Tesla. What have you been watching there?
They have absolutely gotten beat up. Today, they're coming back a little bit. But their valuations, when you look at them, were so elevated, they were over one standard deviation above what would be considered appropriate. So this is actually better to take a deep breath and regroup from where we were at. The losses should help overall moving forward.
And you brought this up earlier. I mean, we're hearing investors are taking money out of the market. What approach and strategies would you recommend for balancing risk and reward?
If you're younger, now's a good time to maybe stay aggressive or continue with your game plan, get a little bit more aggressive. If you're a little bit older, looking to start the income distribution, you may want to look for some dividends or some bonds that are still relatively attractive to take advantage of those.
And the S&P 500 index, those funds are commonly offered within people's 401k plans. Is there something people could do to protect their money?
You can always switch to active managers. You're going to pay more for it, so be careful with what active managers you're going to use. But the S&P 500 has definitely been overvalued. That, as the Magnificent Seven, as they once were called, at least several months ago, they have gotten beat up. So there was too much market cap in those certain stocks. So you're still going to be in the same bag with the index funds. So I'd recommend either diversifying overseas or looking for some active managers.
And, you know, speaking of overseas, how do you think these tariffs are going to affect China and Europe? Because I understand, I mean, Europe, they could just lower their interest rates. Do you see them bouncing back? Is this going to hurt the U.S. more so than other countries?
The reality is the U.S. purchases a lot more things from other countries, so it's going to hurt other countries more. Short term, it will hurt us with the shocks to supply and businesses, as I mentioned, not being able to plan. But it's going to hurt everyone economically. Hopefully, we can figure things out, get a good game plan together, come together as a world, and be able to move forward.
All right, awesome. Alex Langan, thank you so much for joining us, for your insight and time.
Thanks. Appreciate it.
It's a great